This video provides a credit update based on data released in the financial accounts of the United States for the third quarter of 2023. It's important to monitor trends in credit growth because credit is the fuel that drives our economy. When credit growth is weak, so is economic growth. Between 1952 and 2009, all 9 times that total credit adjusted for inflation grew by less than 2%, the U.S. went into recession. As shown in this chart, total credit growth is in blue, GDP growth is in red. If credit grew by less than 2% every time the U.S. went into recession. This video will show that the growth in non-government debt is slowing sharply. Total credit growth is weakening, and total credit growth adjusted for inflation has been below the 2% recession threshold for 8 quarters. These trends suggest there will be a recession in 2024. Wealth, on the other hand, is surging. It's increased by $34 trillion over the last 4 years. To put that into perspective, that's enough to finance all U.S. government debt outstanding. This video will also show that the large surge in government debt since 2007 has prevented 2 Great Depressions. Total credit in the United States reached $97 trillion in the third quarter of this year. It will exceed $100 trillion next year. Keep in mind that total credit equals total debt, the combined debt of all sectors of the economy. This chart shows that total credit growth has been slowing from a peak of $8 trillion year on year in the fourth quarter of 2020 to, over the last 6 quarters, 5.6 trillion, 5.6, 5.0, 4.6, 4.2, and most recently 4. And in percentage terms, total credit growth has slowed from a peak of 10.7% year on year in the fourth quarter of 2020 to, over the last 6 quarters, 6.5, 6.4, 7, 5.7, 5.1, 4.6, and 4.3 most recently. Here's a breakdown of total debt by sector from 1990. Government debt is $28.7 trillion, household sector debt $19.5 trillion, corporate debt $13.7, GSE debt $11.9, the financial sector excluding the GSEs $8.8, and non-corporate business debt $7.5. We're going to look at the credit growth trends for the 6 largest sectors. Normally, we'd look at government debt first, since